to give a quick video as to how you can give your team a bit of a bonus that's not really costing you anything. So many of you would have known about the federal budget. They've adjusted the tax rates, and the changes in tax rates, and I've just put them up here, but the changes in tax rates are actually going to affect from 1st of July this financial year, so 1st of July 2020. What does that mean? Well, you've actually already done the pay runs for the employee from 1st of July. Now, there's no requirement from the government. They basically said you have until about mid-November to get your tax tables updated so that when you are processing the pay runs for your team members, you are actually using the correct tax tables, which is passing extra money back to, it's reducing the tax, passing extra money back to your team. You have to about mid-November. Most of the softwares are updating them. Xero updated it now. So it's 26th of October today. They updated it last week. So when you do process a pay run now, it will be for the lower tax bracket. Now, I thought about this, and there's no requirement for you as an employer to wind back to 1st of July and give that tax benefit back to the employee. So technically speaking, they won't be out of pocket. They will get to the end of the financial year, and when they get to the end of the financial year, they will then get their money back at that point when they do their end of year tax return. Now, what I wanted to show you here is the difference in the tax bracket. Now, we actually have, and I'm just going to do an example of someone that's, say earning less than $90,000. So earning less than $90,000. But if you do have someone earning up then to the 120, that you can do another calculation as well. But basically what we have is the tax bracket to up to $37,000. That bracket has been extended up to $45,000. So what we're basically saying there is that between $45,000 and $37,000, it was being taxed at 32.5%. It's now only being taxed at 19 cents in the dollar. So that's $8,000 that is being taxed at 19 cents in the dollar instead of 32.5 cents in the dollar. So we're talking about, and I'll just get my little calculation up. There's my calculation. So what we're talking about here is $8,000. We've got a 13.5 cents in the dollar tax bracket difference, which is actually going to give the employee an extra $1,080 cash in their pocket over a 12-month period because of this tax bracket change. That boils down to $90 a month. So what I thought is, well, I pay the team monthly. Depending on how you pay the team, you might have to do this adjustment differently. But at the time when I processed the pay run on mid-October, the tax tables had not been updated. So technically, my team could wait until 30th of June. They'll lodge their tax return, and they will get that extra tax savings as part of their 30th of June tax return. They won't miss out. That's not a problem. I thought, well, look, actually, probably everyone needs the cash now at the moment. So how can I potentially give that to them now without having to go through that process for them not having to wait? So I basically said that's $90 a month. And so up to October, so that's 4 months, I've got $360 is what they're going to be eligible for instead. So if I take this away, and I'm going to show you how I did this into the Xero file. So what I want to do is we're going to have to change the in the Xero payroll, the PAYG adjustment. You're going to adjust the current PAYG. Now you can see here the manual adjustment, PAYG budget reduction, negative 360. So that's taking the 360 off. Now I'm just going to get the Xero payroll and I'll bring that across and I'll show you how to do that live. So if we're in a pay run here, we come down to the tax type. And this is where automatically your PAYG taxes on this income is calculated. Obviously, they've got some like help debt here, that is additional tax that's being withheld. And so this is the tax, $810 is being withheld from James's wage here. I'm going to add an extra line here. By default, when you add an extra line, the first one that comes up is manual adjustment PAYG. See, it's actually the only one. This is in the demo company. If you don't have that tax type, I can show you where you can do it in that, but I think this is a standard one. And then I would just put in here budget reduction. Now, make sure you do tell your team members this is not a monthly change that's going to happen. This is a one-off change. You're going to get a nice cash flow boost this month, but it's not going to be the same. Each month, it will just be the extra $90 a month. But in this month, we're going to let them have the full 4 months so that they don't have to wait till 30th of June at the end of the year. Now, you're going to do a negative. Once that's done, instead of taking out the 800 or so PAYG, it's actually saying to only withhold $450 in PAYG. So that's a saving for the employee of $360 in taxes that you basically can pass straight back to them when you actually do their pay run. If you have auto direct debits that are automatically set up for your team for their pay runs, you can just do a standalone one for $360. If you don't have the and I'll just quickly go into it. If you let me go into here. If you don't have that pay item, I think that must be a standard feature actually to have that PAYG adjustment. It's just going into payroll settings and then being able to enter it into the pay items here. Okay, so and then it can be entered in here. But otherwise, that's how you do it. If you've got any questions, feel free to reach out. But on someone earning less than $90,000, getting paid, say, monthly, even fortnightly, it'll be $90 a month. So if you are going to give them that updated, cash boost, you could nearly call it, it's going to be $360 extra. But if you've got any questions, let us know.